Hello and welcome to Investors Guide on ET Now. It's a pleasure to have you join us on the show. We have a packed show lined up for you today, as we always do. We're going to answer some questions and plans, some portfolios, and of course make sure you get rich by the end of watching this episode. Email ID flashing at the bottom of your screen. So let's get straight to it. This is what we have lined up over the next half hour. We bring you the best term insurance plans in the market to help you make your decision. We'll help you pick a term insurance policy online. We'll also review the SBI Infrastructure Fund, and we'll help a retired person increase his monthly pension. Time for me to introduce my guest, Dhirendra Kumar, the CEO of Value Research and our big in-house mutual fund expert, who joins us every week to answer our questions on this show. Dhirendra, thank you so much for joining us on this show again this week. Let's get straight to our portfolio versus portfolio questions. Well, Siddharth has written in. He's 33 years old. He tells us he owns his own home, for which he's paying a home loan EMI, and his PF is deducted by his employer. He also is invested in gold for his daughter's marriage, and he has no plans to invest in more gold. And he has enough life insurance and enough medical insurance. He just wants you to take a look at his mutual fund portfolio and tell him if it's on track and if there's anything he should be changing in that mutual fund portfolio. Now, these are the funds that he is investing in: the Fidelity India Growth, HDFC Equity, IDFC Premier Equity, DSP BlackRock Small and Mid Cap, and Tata PE Equity, which he's made a one-time investment. Now, looking at his portfolio, 14% in going into mutual funds, 19% going into gold through ETF and through spot. Do you think his portfolio is on track for someone who's 33 years old? Would you like him to make any changes?
I would say that his portfolio on a standalone basis, the mutual fund portfolio, the equity portfolio for the long run, where he's investing regularly, that seems to be very well constructed, and I don't think he needs to do anything about it. His other priorities, I also don't have a say, because his allocation to gold is not an investment. He is basically accumulating for a future consumption for his daughter's wedding. So that's not an investment in that sense. It's basically accumulation to gift. Likewise, his real estate allocation is not a real estate allocation if he's living in the house and or plan to live in that house. So in that sense, that is his net worth, but that is not his investment portfolio, which is realizable. I would say just stay focused on your investment and review it annually. Today the portfolio looks very impressive, and it will be, because he has two mid and small cap holdings, and that will see a much steeper decline, or the kind of situation we are in the market right now, on the market right now. So it's very important to stay the course through these times and review his investment every year.
Alright, so that's the advice going out to you. Remember, your portfolio per se on a standalone basis, your mutual fund portfolio seems fine, but remember to review it every year, and keep in mind the fact that you have mid and small cap funds in your portfolio, which means the chance of your portfolio falling during market slumps will be slightly higher. You need to stay focused and invest periodically for the long term. Don't stop investing. You seem to be on track. Write back to us as always if you need anything else. Let's move on now to our hold or sell segment. Amit Kohli has written in. He's also 33 years old and he's invested in a few mutual funds. Now, few is an understatement. He has about 13 mutual funds in his portfolio, and he wants to know which of these he should be holding or selling. Now, the first two funds he's put lump sum investments in, and the first one of those is the HDFC Infrastructure Fund. There are 13 funds in his portfolio. A lot of them are diversified. Does he need that infrastructure exposure? Would you recommend he sells it?
HDFC Infrastructure is an impressive infrastructure fund, but he can do without it. And as you are suggesting that he has just too many, he already has too many funds. One surely, even and HDFC Infrastructure, despite being a good fund, it is not as good as most other equity funds, the kind of return one has been able to derive. So he can do without it.
Right, the next one on his list is also a thematic fund, Reliance Diversified Power Sector Fund. Continue investing in this one, Dhirendra?
No, I think he should discontinue it. And this fund has had a great run, and that was a time when and so much so that many investors, their only fund used to be this fund, Reliance Diversified Power. But investors have learned the disadvantage of concentration, the disadvantage of just having a fund which is focused on one sector. It has been disappointing of late. I think an investor like him who is investing in a couple of funds and investing regularly can easily do without having any sectoral fund or any thematic fund.
Well, the next up on his list are his SIP investments. Now, like I said, there are 11 funds that he is invested in. So what we could do is take a look at the funds based on their individual performance, and at the end take a look at how he can consolidate this list. So the first one on his list is the DSP BlackRock Top 100 Fund. Obviously, one of the funds that you recommend. So continue investing in this one?
Yes, hold.
The HDFC Equity Growth Option is the next one on his list. Continue investing in this one as well, Dhiren?
Another fund which should be held.
IDFC Premier Equity, also another one on your list which you have been recommending. So would you recommend that he hold on to this one?
Another impressive fund, and it should also be, he should continue investing in this one as well.
HDFC Top 200 is the next one on his list. He's investing 16,000 in this, and he's investing 11,000 in HDFC Equity. Would you recommend he consolidate that investment?
Yes, I don't think it makes sense to be investing in both the fund and just for sake of simplicity or ease of manageability, he should consolidate the two.
Next ones on his list are also possible funds with overlaps: the DSP BlackRock Small and Mid Cap and the DSP BlackRock Micro Cap Fund. Both of those funds are part of his investment. Would you recommend consolidating these as well?
No, I would not recommend consolidating him these two, because both funds they are riskier fund. They will and they hold promise, but these two funds don't have that overlap, because micro cap is real micro cap, and small and mid cap is small and mid cap. So the micro cap actually invests in tiny companies, and it has been a very outstanding fund, and it has seen a steep decline, very much in line with what a micro cap fund potentially can do to your money. So the only thing to be careful about these two funds is to have a much smaller allocation. They should be a very nominal part, part of your portfolio, not a significant part.
The Fidelity Growth Fund is the next one on his list today. Continue investing in this?
Yeah, it's a reasonably good fund, and he can well consider continuing his investment in this.
Birla Sun Life Frontline Equity Plan A, 6,000 rupees going into this fund every month. Also a hold?
Also a hold, and I would say he can. This is a fund worth carrying on.
The Franklin India Blue Chip Fund, in the view of everything else that he has in his portfolio, would you recommend he continue investing in this?
Looking at his time frame of that he's 33-year-old, he still has many years to invest, and trying to have a fund which has a much narrower focus. So from that standpoint, at something like a DSP BlackRock Top 100 or a Franklin Blue Chip, he can do without it. He should have a fund which is little more flexible. Exactly for the same reason why we said that he should rather have his money in HDFC Equity than HDFC Top 200.
Right. Reliance Equity Opportunities is the next one on his list today. Like I said, this is a long list. Should he continue investing in this one?
Yes, it's among the few impressive funds from Reliance, and he should continue investing in this.
Reliance Growth Fund is the next one on his list. Hold or sell, Dhiren?
Simply going by the number of fund he already has, and a relatively average listing in his overall listing of his fund holdings, I would say he should sell this one.
Reliance Gold Savings Fund is also on his list at this point. This is the Gold Feeder Fund. Should he continue investing in this one?
If it is a very nominal part of it, and at the same time he should have his target set. He can continue investing in this.
The Mirae Asset China Consumption Fund, which is investing 5,000 rupees every month in. Continue investing in that fund, Dhiren?
It's an interesting fund, but just because he has just too many of them, and for sake of manageability, I would like this to be scaled down.
Good luck with those investments. Remember, you can write back to us if you need anything else. There's an email ID at the bottom of your screen. If you have questions for Dhirendra, write to us. It'll be our pleasure to answer your questions on the show. We're going to slip into a quick break. On the other side, we're going to review the SBI Infrastructure Fund. So don't go anywhere.